Okay, I want to start off with, since we're going to start at the very beginning, assuming you almost know nothing about stocks or stock trading, I want to start with at least listening to Warren Buffett, at least a couple seconds. Still a good company to invest in, Berkshire Hathaway. We'll talk about it later. All right, well, I'm going to fast forward. I'm going to go to his 6 principles and see if I can't describe most of them. Okay. All right. When he says cash is not a good investment, cash is not working for you, especially currently with the interest rate so low. So if you have cash in a bank account, I mean, right now it's earning 0.05%, and it's not making you any money. So that's one of the very first point. Obviously very important. Invest in productive assets. So when he says productive assets, you want to look at companies itself. And you're really actually buying a fraction of a company. And that's what buying into the stock market or buying one share into a stock company or getting stocks is you're buying a micro share and you're buying into that business. You're an owner of that business. So make sure that the company itself is productive. I'm going to show you some key ways to figure that out. Stay out in your circle of competence. I mean, if you're, I don't know, he stays in bank stocks and he stays in financials and pharmaceuticals, and that's basically what he knows. And so he's always kind of stayed in those sorts of different stocks and companies. But for you and your stock competence, you have to figure out exactly what that is for yourself. What do you actually know and what you know to be true? And you are evaluating companies. So you are looking at what companies do. Do they have a good future, or are they falling off like the market? Like something like a Tesla is at the very top of the market. Now, that's not to say Tesla won't keep going up, but there's going to be companies like Ford and NIO and Xpeng and GMC. They're going to start taking some of their market share from the EV electrical vehicle markets. And then play big and don't waste opportunity. So if you're going to go in and you're going to step off the bridge, step off the bridge. And the one thing I can tell you is time is always your key. Time is a value. If we look at, and I'm going to move this back down, and we look at Yahoo Finance, and we're going to have to talk about this one, and you need to go to Yahoo Finance, and you're going to have to figure these things out. But if we look at something called like the S&P 500, which is a group, and we'll talk about index funds and buying index funds, and we look at that, and it's going to give me a picture of it in a few seconds. But essentially, if you buy into an index fund, which is passive income, you will be buying into the top 500 companies in the stock market. It's a very good and safe, predictable way to make money. It is much safer because I will show you this. Let's go max over time. Over time, what do we see with the S&P 500? We see that over time, given enough time, this is 1984 to the present, it always goes up eventually. So time is on your side. Let's say you bought at 1420 and it fell all the way down to 841. Well, it went all the way back up to what, 1530 at that point? You would have made money, but if you hold even longer, look at where your profits have gone to. So that's one thing that people talk about is profits over time. Time is your friend, okay? And remember, our goal is to buy low and sell high, not sell high and buy low. I have a couple friends that love to buy stocks, and the minute the market panics, they sell their stocks. Oh, well, it's going down, we're crashing, everything's going to happen. No, Give time. Be patient. Don't panic. Don't ever panic in the market. So those are some pretty good advices to begin with. Now we can look, and this is going to be a very important area. So I kind of want you to look at Yahoo Finance and see if you can't pull that up on your own computer at this particular time. So they're going to tell you right now, today is Sunday. So they're telling me what the market will open up at. It gives you basically the current projection of what prices are. So this is what's happening when we get to other markets. Remember, the United States and the NASDAQ and the U.S. Stock Exchange is not the only market. We have the Japanese market. We have Middle East market. There's many different markets throughout the world, so that when we're asleep, they're trading. So that's why sometimes in the middle of the night, you see what this forward-looking progress is. Now, the S&P 500, I explained, is top 500 stocks. The Dow is the top 30 stocks. The NASDAQ is an exchange with basically close to the next 2,000 stocks. And actually, Russell 2000 is the top 2,000 stocks. So if you want more specific to a little bit bigger, to a very broad range of buying into the market, these are called basically index funds, and they also can help you generate passive income. If I click this button, I get oil, gold, silver, and we get some commodities, and we can also get what they call fiat currency, or what is the European euro doing against the dollar. So, and you can invest in those as well if you want to. So let's look at oil, and we think oil prices might be going down. I'm sorry to tell you, it doesn't look like it. It looks like this is per barrel of oil. All right, gold seems to be going down or maintaining, and so does silver for the most part. So how do you actually use this to read companies? Let's go with a very easy company to look at. Let's go with Coca-Cola. All right. So I'm going to type in Coke, and you can type in Coke, Coca-Cola Consolidated. All right. This is not the Coke I thought we would get. So that's Coca-Cola. Let's see. Okay. Gives me, where's the Coca-Cola stock? That's Consolidated. God, I don't know the stock symbol of it. So I'm going to go to a different one that I know very, very, very well, because I invest in a lot of oil stuff. So I'm going to go to ExxonMobil. It's easier for me to kind of deal with and show you about. All right, why do I like Exxon? Well, I knew over a couple of years ago, especially when the market crashed, when we went to zero, that investing in oil was probably a good thing. So every time I go to the gas pump, I'm kind of celebrating, unlike most of you. All right, so we're going to look at this chart itself, and I'm going to go through to how to read this chart. This is the current stock price. This is what it's gone up in the last 24 hours. So it did go up $1.24. All right. This is after hours. If I wanted to buy it before the market opens, I'm going to have to pay $71.99. Okay, because it's currently trading. So we're going to look at, and we're going to go down here, and we're going to look at some key factors. This is what it opened. This is what the bidding is. This is the X. This is the 52 range. So we're very near the top at new all-time highs as far as the last year. All right, this is the volume, and this is telling you whether it's overvalued or undervalued. Now, overvalued means you're probably paying a little bit too much for the stock. Now, that does not mean necessarily that this stock will not continue to go up. If we've looked at the last month, look at what has happened. If you even bought this 1 month ago, it was at $61, and now it's at $71. So I think that's about 15 to 18%. My math isn't all that good, but that's what you would have made in just since December 31st to the day. All right. So this is actually a stock view. It tells you and shows you at least a little graph of where the stock has been and where it's going. And I'm using these time frames up here to kind of change things. All right. This is telling you what the outlook for this stock is that they're thinking in the short term, which is really 2 weeks to 6 weeks, I'd say around 30 days, they think it's going up. Bullish refers to a stock that you believe or they believe is on an uptrend, that is going up and will continue to go up. So it says a bullish pattern detected. When it says bearish, they mean it's going down. So if we're in a bull market, it means most stocks are on their way up. And if we're in a bear market, it means they're going down. And there's been plenty of instances over the stock's history where, believe it or not, even though we've been kind of in a bull market for the last 13 years, that stocks actually do go down. All right, so I'm going to click on some of these other details so that we can kind of look more about some of these things. I'm going to look at statistics. And so we're going to look at some statistics that they have. And I'm going to go down here and we're going to look at something called a PE ratio. And this is a real big one when we're going to talk about value stocks. And I'm going to talk about a few different things today. First of all, maybe I should go back and tell you, why would you invest in the stock market? Well, you have two ways of earning money. You have to earn money with your hands and going to work, okay, which is called active, okay, income, which means that you're actually actively involved in doing something. They give you a check at the end of the week or month or whatever it is, and you put it in the bank, and that's how you make money. But there is another way called passive income, where you invest in something like a stock market, okay, and it goes up over time, and you're earning a percentage of what that company or whatever you've decided to invest in is. It's a much easier way over a period of time to earn a lot of money. And the best way to do that is to not necessarily worry about the market, but dollar cost average. And what does that mean? It means each month put in about the same amount. It could be $10. It could be $100. It could be $1,000. But every month you buy whatever stock it is, we're saying ExxonMobil, I'm going to put $10 in every month. Now, you can buy less than one whole share. You can buy $10 worth, okay? I can buy micro caps of Apple, of any sort of thing. Even if they're Tesla, it's over $1,000 a share. That just means I'm going to have 0.01 shares. But I still can invest into that company. And eventually, if my goal is to get one share of it, eventually I will get one share by dollar cost averaging. So that's also a real big helpful trend for some of you. All right, now we're going to go down here and take a look at something called PE. And this is price to earnings. And what we like to look at when we look at price to earnings is the lower, the better. Okay, so you see that currently it's 10.8. What happened? It's going down. Let's look at what happened there. So we want lower, and we want it to be going down. Now that means that the price of the stocks are measured by how much the company actually earns. And so we want a low ratio on something like that. We're going to go down here and look at some other financial statistics that may help you. See, the operating margin means that they're actually spending 5.72% reinvesting into the company, which actually means the return on the investment you can see in the revenue. And we're going to look at their profits and their diluted earnings and some of their cash flow. I'm sorry. So we look at their total debt, how much they owe, and how much they're gaining. Okay. Operating cash flow, they have quite a bit of money. We know this is one of the biggest things. Now, why would you invest in a company that kind of goes sideways or something like this? This is a dividend stock. And the reason why I say that is usually in dividend stocks, you don't see them go way up or way down. I was trying to get to Coca-Cola. It's another dividend stock. So that means that this company is going to give me 5% per year, no matter what. So I get 100 shares this year. In 1 year, they're going to, over the period of this year, and usually it's every 3 months, usually it's every quarter, but sometimes it's every 6 months or every year, they're going to give me back 5% on my money. So I bought 100 shares, and at the end of this year in 2023, I'm going to have 104.98 shares. They're just going to give it to me. So that's what dividends are. And that's why they're usually safer investments in times of volatility. What does volatility mean? It means people are either really scared or they're really greedy. And Warren Buffett's famous statement is, when people are greedy, you should be fearful. And when people are fearful, you should be greedy. Okay, I don't want to dissect that too much, but that means when everybody thinks the market is going to crash and it's horrible, buy. That's when you buy. So when the market's crashed all the way down, I'm looking at, wow, this is a great buying opportunity. This is when I buy. You make money when you buy, not necessarily when you sell. If I buy super low, hell, if it goes up, I can sell it anytime and make a profit. But if I buy already when it's really high, everybody goes, oh yeah, the market's going to go on forever. It's great. No, it's going to crash. It will crash. And so now you're buying high and you're not going to sell low. That's not my advice. And believe me, I'm not a financial consultant. So again, this is just information. And this is a lot for my students at school and my fellow colleagues. And any of you out there that wants to just know, what's the stock market? All right, so we've kind of looked at some of these other things. I'm going to look at, I'm going to go back to the summary, and I'm not going to look at the bars and trading view today. I just kind of want to go over, okay, some of the basics. So let's do that now. First, where do I buy stocks? All right, well, I can go to a company called Robinhood, which is actually free. And I will put my link down below. If you want to sign up for Robinhood, please do so. And please use my link if you could. It also helps this channel, helps me out. All right, or we can go to, I had Webull up here someplace. Webull is another one, Webull. Okay, that's another free one. If you have a little bit of money, and it doesn't even take much money, you have to put like $500 in. I personally use Charles Schwab, and Charles Schwab gives you a ton of advice. Okay, they give you all sorts of retirement benefits and all sorts of benefits as far as analysis of the stocks themselves. So how you can find out about PE ratios and companies that have real low PE ratios, I will do a video for you on that later. This is just today a very introductory video. So we're going to have a few different companies, and we're going to look at value stocks, dividend stocks, growth stocks, and index funds. All right, so I'm going to actually open up a new tab to do this and show you what are the actual differences of these things. So the types of stocks, we're going to go to something called dividend stocks. Okay, and we're going to look at all four of these things. Dividend stocks are like the ExxonMobil company that I just showed you. All right, they give you high dividends. So what are dividend stocks? They are Coca-Cola, they are ExxonMobil. Okay, and what are the best dividend stocks to own? All right, so let's look at what they're saying right now. How do you identify a dividend stock? Strong cash flow, low earnings expectations. So they just go over time, like Coca-Cola. It's got a brand name that's going to stay around forever. People can buy Coke no matter what. So they have strong cash flow, but they have low earnings expectations. Okay. Steer away from debt. They don't have very much debt if we look at Coca-Cola stock, and we go the best of the bottom line. So let's look at what they say the top 10 dividend stocks are right now. And these are call symbols that you would look up if you want to find these different stocks. Okay, so let's look at BP. I'm going to go back here and we're going to type in the top box, BP, and then we should see British Petroleum, and it's going to come up eventually, BP. Here it is. So we're going to hit that. It's listed on the NASDAQ, and currently it's $32.04. Let's look at what they're saying is a high dividend stock. So let's go down to here, And let's look at dividend dates and forward and dividend yields. 4% per year. Okay. So there it is right there. We can look at statistics and what they've paid out over the last few years. And so let's look at what their dividends are. Do you notice that their forward P&E is going down as well? That's a good sign. That means they're starting to get undervalued, and we like undervalued stocks. Okay, and low PE. All right, so we're going down to look at specifically this one, dividends and splits. Yeah, forward is about 4% per year, and the 5-year average is 6.85. Now these change every year. You might get 5% one year, 2% the next year, but they're saying over a period of time, that's $6.85. So that's about, I don't know, 6.85% that it's actually giving out over time. The bank's only giving you 1%. All you had to do is buy this and hold this. Now you got two ways of making money. You have making money with the dividends, and you're also making money if and when the stock price goes up. Okay, so I have 100 shares today, and next year I have 106.85 shares, or whatever the dividend is in this case. We can go back down here and look, and the dividend's 4%. So I have 104 excuse me, 104 shares, and as of today they're valued at 32.04. But we look at a chart over a period of time, you're going to see that this stock probably is going up. What do we think about the future? Do we think about the future of oil is getting better? Do we think next year will be better? And I'm looking at the company itself, and that's what you're looking at with all of these. I happen to do real well with oil, and so I kind of am bullish on oil over the next year. That's just my opinion. All right, now I do have some other things that we will talk about, Stochastics and RSI and some of the other trading things in further videos, but that is not what today is about. So this is what happened in March of 2020. So when everything crashed, what have we seen so far? It's just gone up and up and up. Now, is it a chance that it'll go up and then down and then up? Okay, what goes up does come down, so we do know that eventually. But you also have to figure out how long you really want this trade for. Do you want it for 6 months? Do you want it for a year? I'm looking at oil, and I'm looking at it at 2023, 2024, anywhere in the next 2 to 5 years as peaking. Okay, and then I'm going to probably get out of it. So at that point, you always have to figure out what's your time frame. So if my time frame is 2 to 5 years, why am I worried about whether this thing falls to 15 tomorrow? Not, because my time frame is 2 to 5 years, and I know in 2 to 5 years I'm going to see a price over $32, and I will make money. Never, never, never sell and panic. I've watched my portfolio shrink to 50% of what it was during the 2008 crash. Okay, but over a period of time, not a problem. It will go back up. It is tripled or quadrupled since then. Don't panic. All right. So that is really what dividend stocks are. All right, let's go to something called value stocks. And this is what Warren Buffett believes in. And this is what I was talking about when I was talking about PE ratios. A dividend stock is a distribution, basically, of a company that he believes is undervalued. And they always have somebody. Well, who is Warren Buffett? Well, he's one of the 3 or 4 or 5 richest men, and he owns Berkshire Hathaway, which is a great value company to own. If you want to just own something that's value, that's him. His company always goes up. Does it go up a lot? Not really, but it always goes up. Look, over in the past 15 years, his company has gone up 75%, and that was in October. Best value stocks, Kiplinger. All right, and how do you identify them? Again, low PE ratio, price to earnings, and I told you that before. PE, okay, how much price or price to book? Okay, I like P to E ratios. The lower, the better. So you can look at screeners for those sorts of things. So what are the best value stocks right now? Let's see if they have some. All right. So these are things that have produced goods. Let's just talk about Beyond Meat, or because that's something maybe all of us know, or let's talk about Disney. Do we think more people are going to be going to Disney in the future than they are currently? Do we think they're going to be producing more videos and more movies that people are going to be buying in the future? All right. Okay. They have a low PE ratio, otherwise they wouldn't be on here. And I told you Berkshire Hathaway is what the company Warren Buffett owns. All right, this is what they're worth. So we know Disney's worth a lot. See, I told you Buffett's worth a ton. Amazon's another one. Okay, so let's just look at Disney. Do we think that their future is going to get brighter, or their future is going to be going back down? Well, provided, and we never know this, COVID came out of nowhere and it crashed everything right then and there, but it was a great buying opportunity because of it. All right, so Walt Disney itself, okay, is a company that has future value, because it's right now, its stock price is, and let's see if I can go to this, is probably undervalued. And that's what they're going to say on here. So I think it's Disney, DIS, it's Disney, Walt Disney Company. Let's go take a look at them. And they lost to $3.50 today. Okay, let's look at their historical returns. It does take a while for this thing to load, obviously. And we see a lot of red. So let's look at 6 months. Oh, yeah. See, they were up here at 184. And then now today they're at 151. Now, what do we think? Now, this is a better company to buy because it's low. Okay, you're buying at a good price. Okay. Let's look at its history, or let's look at 5 years. We'll look at that. So, okay, over a period of 5 years, if you bought here, it goes up. It's still higher than what you bought it in 5 years ago. Now, we're never going to buy the lowest, and we're not going to sell at the top, but we can make money this way. So we see recently, now what was happening between 2020 and 2021? Okay, weren't people locked down? So they really had to turn to TV quite a bit. It looks like short term is going down, midterm is doing this, and it still says it's overvalued. But you can look at the P/E ratio to figure out, is it actually, because I don't believe any of this stuff. So I don't know where that's at. That would be in statistics again. And then I can find my PE ratio for this one. And we see a peg at 1.11, and the forward P/E went from 89 now down to 33. It's going in a downward pattern. So it's saying it's going from very overvalued over here to very, very undervalued at this time. Remember, we're looking at stocks for long-term purposes. All right, so value stocks have the ability to raise whatever their income is, and it doesn't matter if you're in an inflationary market or possible. Can Disney raise their tickets up? Sure. Can they raise the price of their videos up? Yep, they can. So if inflation hits, they're not like some companies that don't have the ability to raise things up to match inflation. These are value stocks. All right, oil, another one. You go to the pump, what happens next week? Well, it's going to be over $5, or soon it will be. Okay, all they have to do is match inflation that way, because they have a product to sell. Are they a good business? Have they been around? Do they have good people working for them at Walt Disney? And the answer is currently, yes, they do. But that's not always the case with every different company. I'm going with some bigger companies so that you'll kind of understand the principle of this. All right. So I don't want this video to be forever, so I'm going to go on to something called growth stocks. And what are growth stocks? Now, growth stocks are speculative. You can get the highest returns from those, but also they have the highest risk. So when we look at that, we're starting to look at, your Teslas, your EV stocks, top growth stocks. Let's just see what they're saying for 2022, which is what we're in. All right, they give you some top growth stocks, and they're thinking big tech, and this is not necessarily helpful for you, is usually growth stocks. So what are we looking at? We're looking at Pinterest, and we're looking at Snapchat, and we're looking at all sorts of tech stocks. So that would be, let's see, growth stocks, top 10. Let's just do that. All right, so I can get you a better picture because some of those are micro stocks and you wouldn't really necessarily know those. All right, this should probably, since it's Motley Fool, yeah, there you go, Amazon and some of the other ones. All right, now, like I said, you can get incredibly lucky, and over a period of time, you can make a lot of money, but these things can also crash too. So if you want to make bigger money and you're looking for bigger investments, sometimes you want to look at short-term gains you can get. And we will go over some principles later on the next video of how to actually invest in the stock. So I'm going to wait on that one. I'm going to scroll down. And they're what? Netflix, Nvidia, that's a chip maker. Activision Blizzard is a game maker. Priceline.com. Marvel is a, it's not the comic book, but this is a 5G company. So when you're looking at those sorts of things, look at these gains they've made. Huge gains, it said, since 1997. So these things have huge gains, but they also have huge crashes. So they really do talk a lot about those sorts of things. Now, how do you identify a growth stock? So, and I couldn't even spell that. Identifying a growth. See, I can't spell for a teacher. I'm horrible. Stock. Identifying those by their financials. All right. So, and these are really the major companies in the S&P 500, which we will talk about next. All right. So, how do you figure out what these things are? These are trendy stocks. Understanding, making it easy, and you're looking at graphs and you're looking at what's trending lately. So let's think about, I don't know, the world around us and what's actually trending lately. Would that be something like Carnival Cruise? No way. You know that's a growth stock right now. It's very, very low, and a lot of people like to invest in things like that because what they're seeing is this is not helping me at all, but those are some growth stocks right there. In Uber, Nike goes up and goes down. All right, Oracle is another one. Snap is another one. Intel's a little bit more a value company, but they are showing some companies that they've pursued. So anyways, I'm not giving you that great of a hint on growth stocks, but your Teslas, anything that has a chance, and it's very trendy now, but doesn't necessarily, it could be good later or not. What about Zoom? Zoom went up huge, but now it's stabilizing off because what? Teachers aren't using it anymore. There's a lot of people going back to the actual work. So that was a great growth stock for a long time, but now it's starting to fall off. Do they have sound business principles? Yes. Can they find a new niche to work on? Yeah, they can. All right. And then I think the last thing I want to talk to you about is index funds. Now, I believe that you should have at least 50% of whatever you have in the market, 50%, I'd say even more, in index funds. So those are the safest bets. And over time, that's what I want to bet on. So what are they? So those are the S&P 5. Yeah, there they are. What are they? Those are the S&P 500s and the top funds. And we're going to talk about some other funds that they have, like Schwab has its own fund, and so does Webull and some of the other ones, and iShares. So an index fund is basically you're buying into the top 500 companies, or you can buy a ETF, which is more specific, but I want to buy ETFs that are all going to be in energy. So they're going to give me the top 20 energy stocks. All right. Or I want to buy one that's the top growth stocks or value stocks. Or I want to buy commodities like gold and silver stocks, which means you actually own like a percentage of a gold and silver company. So gold goes up, your stocks go up as well. All right. So these are index funds, and we look at the S&P 500 as one of the major ones. And what's the difference between mutual funds? Okay, let's look at that one, and ETFs. Mutual funds are more specifically a block of overall differences. Mutual funds and exchange funds are baskets of assets of investors that you can buy. Now, both of them are much more stable than buying individual stocks because you're buying a block of stocks. So I have a small ownership into all the 500 if I buy the S&P 500. One of those companies is called SPY. So if I want to go back to this, and it goes up to here because I don't want that. I want to go to SPY, okay, right here. I'm going to something called SPY, which is the S&P 500, Spider S&P 500 ETF Trust. This is what you would buy if you wanted to just invest in the top 500 stocks. And again, let's look at that over even just the last 5 years. It doesn't matter if you bought high here and it crashed down right here. Over time, what happens? This is what Warren Buffett loves, is he says over time, this thing will just continue to go up. And over the last 13 years, he isn't wrong. We look at the max in the history of the S&P 500. Like I said, there are time periods at which we had high growth, and then maybe 3 to 5 years it went down before it actually went back up again and surpassed that. And we're looking at the early 2000s to 2007. And since then, right here, what's happened since basically 09? It's just continued to go up. So am I looking for a pullback on this? Yeah. And that's when a great time to buy is. Like I said, last thing I want to show you is the fear and greed index and greed index chart. That's a good one to look at too as well. All right, so we're going to look at images of fear and greed. There actually is a fear index chart right there. It is. Okay, that's for crypto, and this is for the market. So it should give me like a little ticker that shows one way or the other. There it is. We're kind of in the middle. Now, when we have extreme fear, what did Warren Buffett said? Buy, buy. And we have extreme greed, sell, sell. And how do you sell? Do you sell all your position? No. If I'm dollar cost averaging in and putting 10% in or whatever, a little bit each month, I take off 10, 20% at that time. Because what happens if it continues to go up? I don't miss out on profits. Okay, so over the long term, those are the sorts of things that we're going to do. All right, I hope that this video you found to be extremely helpful and that you learned a lot by just watching some of the things of this. Today was just why should I even be in the stock market? What are some of the things we should be looking at in the stock market and how I can possibly invest? All right, as always, be blessed. Love you guys. Please, if you like this video, if you found any value in it, can you like and subscribe? I really would appreciate it. And again, be blessed. Have a wonderful, wonderful day and week.